This video from Guide to My Home channel gives insight for financial obligations when buying or building a home in India. Whether you're purchasing a ready-to-move-in property or constructing your own home, the financial commitments go far beyond just the price tag. Here's a complete breakdown to help you plan wisely. Following sections explains the roadmap for financial planning to be considered in this process. Item 1. Fees charged by banks. Home loan processing fees. It vary from 0 to 3%. Usually nationalized and renowned private banks charge around 0.25 to 0.5%. Legal and technical valuation fees. For assessing the property's legal status, value, and condition, these fees are charged by the bank to ensure the property is a sound investment. Other charges. In addition to processing and legal fees, borrower also need to pay charges such as MODT, Memorandum of Deposit of Title Deeds, Notice of Intimation, vetting charges and surcey, Central Registry of Securitization Asset, reconstruction and security interest to the banks. Borrower also needs to bear the cost of stamp paper for all these processes. Do not get confused these stamp paper charges with stamp duty charges, which is to be paid to government. Item 2. Down payment. Down payments are typically 10 to 25% of the property value. Borrower need to arrange this cost upfront prior to loan disbursement. For example, for a Rs 50 lakh home, expect Rs 5 to 12.5 lakh as down payment. Your credit card score plays a major role in this entire process of approval. If you have sound credit score that is well and above 725 out of 900, banks might provide loan up to 85% of the cost of the property. Item 3. Stamp duty and registration. Stamp duty is not covered by most home loans, so you'll need to budget for it separately. This is a substantial amount and you need to be prepared for it. Usually it ranges from 5 to 7% across different states of India. Female buyers often get concessions to promote homeownership. Registration charges are typically a fixed percentage or capped amount. Item 4. Goods and Service Tax, GST. It is levied on under construction projects. Usually 5% GST is charged on non-affordable housing and 1% GST on affordable housing with conditions apply. Please note that no GST is application on ready-to-move-in homes. Item 5. Assessment of home loan EMIs. Banks assess your fixed obligation to income ratio, FOIR, to determine your loan eligibility, because it measures your ability to handle new debt payments alongside existing ones. A lower FOIR signifies a healthy financial capacity, while a higher FOIR suggests your income is heavily committed to other expenses, potentially leading to loan rejection. Not many are aware that, in the real estate industry, for under-construction property, pre-construction interest is charged on the amount borrowed during the construction phase of a property. This interest is applicable before the property is completed and ready for possession. So you may need to prepare yourself for a situation where you need to pay rent for your present stay and also pay the interest for the home under construction. So, considering these factors, you need to decide the tenure of the loan. To reduce the EMI, you may need to increase the tenure and in turn will pay more interest. Item 6. Tax implications. Property tax or house tax is important to understand when buying a house in India. It is collected by state or municipal organization, and the amount varies depending on the state where the property is located. It's an annual cost, but still you need to bear it for lifetime. Item 7. Interior design and furnishing. This cost varies significantly, but in India, they can range from Rs 400 per square feet for a basic design to Rs 2500 per square feet for a luxurious interior. The price depends on the scope of work, chosen materials, and design complexity, with metro cities generally having higher costs. For a precise estimate, it's crucial to consult a professional interior designer for a detailed quote tailored to your specific project requirements and budget. If you want to, you may need to also add few furnishing items for budgeting purpose. These personalized decoration items can be such as paintings, sculptures, and other decorative items, and are generally classified as soft furnishings or decor, which can be incorporated after the primary design and construction are completed. In addition to the items mentioned earlier, you may also require other installations such as safety grills, surveillance systems, smart monitoring equipment, inverters, or solar panels. These can be considered essential depending on individual needs and lifestyle preferences. So choose wisely and judiciously for these sections, as you are the one who is the decision maker and in turn decide the budget. Item 8. Maintenance costs. You need to account for two types of maintenance cost, that is regular and other is unplanned or unexpected. Regular maintenance costs. Gated communities provide a range of amenities, such as parks, gyms, and play areas. The expenses for maintaining these facilities are shared among homeowners and are typically billed on a monthly or quarterly basis. Charges are generally calculated per unit area, ranging from Rs 2 to Rs 4 per square feet. Unexpected maintenance costs. Expenses related to repairs, damages, and renovations are difficult to predict with accuracy. However, it is advisable to estimate and set aside funds for such contingencies. As a general guideline, allocating approximately 1% to 2% of the property's value annually can provide a reasonable financial cushion. Item 9. Insurance cost. According to the Reserve Bank of India, property insurance is not compulsorily required for a home loan. However, most banks and other financial institutions advise and even insist on property insurance to protect in case the house gets damaged. In addition to the costs mentioned above, it is advisable to build an emergency fund covering 6 to 9 months of living expenses before making any commitments. This fund serves as a financial safety net in the event of job loss or unforeseen expenses. Guide 2. My Home has developed a comprehensive spreadsheet to help you assess and plan your housing costs. This tool can be shared upon request. Buying a home is a milestone, but with smart planning, it doesn't have to be stressful. Stay informed, plan ahead, and make your dream home a reality. Like, share, and subscribe to Guide to My Home for more smart homeownership tips.